I would like to get your thoughts on potential spillover effects, really, because there's a lot of concern today as we approach a new auction by French debt authorities. Like, there could be ramifications here for other parts of the Eurozone debt market. Are you concerned that this call for a snap parliamentary election in France could have ramifications also for other Eurozone bond yields, including the Portuguese?
Well, good morning. We are confident that the European institutions and the European project will remain very strong. And we believe markets will continue to have confidence in the Euro project. And in our particular case, Portugal is well suited to be protected from market adversities. We had a surplus of 1.2% of GDP last year in our fiscal balance, and we forecast to continue to have surplus on the fiscal balance of 0.2, 0.3, allowing us to reduce public debt to close to 95% of GDP this year, and in a path of reduction up to 80% of GDP in 28. So I think concerning Portugal, the fiscal balance, the structural reform program that the new government has, the economic growth perspective, and the reduction of public debt will allow us to continue to have confidence from investors and markets in a broader confidence of the euro.
Right, but recently you've highlighted that in the first quarter, the Portuguese economy registered a deficit. You've suggested that a lot of that had to do with the previous government. You've blamed them for the fiscal position of Portugal. So ultimately, what is the message to international investors? Do they need to be concerned about the state of the fiscal position in Portugal?
No, international investors and international institutions should be confident on the fiscal position of Portugal. We will end the year with a small surplus, 0.2, 0.3% of GDP. We forecast for the next year a surplus of the same magnitude. That will allow us to continue to reduce public debt for 5 percentage points a year, and we will remain extremely robust in terms of public finance, and also with economic growth. We forecast at least 2.3% economic growth next year. With the structural reforms we're implementing, we expect growth to increase, and we believe our potential GDP could grow up to 3% over the next years, giving more fiscal space to Portugal to reduce the public debt.
Now, a lot of the economic performance is coming from the tourist sector, and this is not just a case in Portugal, it's very much a trend across the south of Europe itself. But ultimately, Minister, do you recognize that there's potential risks here of a tourist bubble, really, for the Portuguese economy and more broadly for the south of Europe?
Well, tourism is an important sector in Portugal, has always been, but the value of the tourism has been increasing. We are creating more and more value in our tourist supply, but other sectors are also growing. We have more and more exports on technology, on other services, also on industry. So we're continuing to diversify the Portuguese economy, reducing the weight of tourism, and in tourism itself creating more value add in the service that we provide to people.